continue presentation under part 2. We mean slightly more complicated because I will discuss about how we construct a portfolio, what are the algorithms that we use. I will share some of the performance of MyTheo over the past few years and since inception. First of all, we start with what are asset class that actually MyTheo investing in. You can see here, actually, MyTheo actually classified asset class into 3 different categories. First, equity. We actually invest, as Matt already mentioned, we already only invest in ETF. We have regional ETF, we have country ETF, and we have factor-based ETF. For some people, factor-based ETF is actually something that very new. Basically, regional ETF, basically you invest in ETF that something like Asia Pacific equity. Country ETF, you invest in Hong Kong equity, Malaysia equity, or China equity. But factor-based is different. It's based on factor. For example, you might want to buy ETF that only invested in growth stock, value stock, or ESG stock. The factor is either growth, value, or ESG, or many more. The second classification, second group is really fixed income. In fixed income, we have almost all range of the asset. For example, from the lowest risk asset, such as government bond, to corporate bond, to high yield bond, and even we also invested in preferred stock. The real asset is the third group, is something that we are different compared to our competitors. For example, you can see most of our robo-advisor actually invest in gold, actually ETF. But for us, we do also invest in gold, but we also invest in other metals such as silver and even the metal ETF itself. On top of that, we also invest in commodity like crude oil, agriculture, real estate and infrastructure. The real estate mostly REIT and the inflation hedge bond, which means the bond that actually yield went up when inflation goes up. What unique about our investment process? That's why we divided our asset class into 3 different groups. The equity will be invested in growth portfolio. Income, you only invested in bond portfolio, and inflation hedge actually invested in a real asset portfolio. So you want to buy growth, basically you put, assuming you want to put 100% your portfolio into growth, basically you want to invest 100% in equity. If you want to invest 100% in bond, you can put into income portfolio, or you want to invest into real estate, you can put in inflation hedge portfolio. But the best thing is to invest in all asset classes at once. Okay, this is how we created our portfolio. Basically, when you have personalized portfolio, we said we have 231 portfolio, 228 portfolio, you will be invested across all 3 portfolio: growth, income, and inflation hedge. Your personalized portfolio is created from combining weight of each of these functional portfolio, all 228. Another 3 portfolio that make up to 231 is if you decided to invest 100% in growth, 100% income, or 100% in inflation hedge. That's how we created our portfolio. It started from functional portfolio approach. It means each portfolio have individual characteristic.
I especially like your explanation about inflation hedge, because earlier when you showed about inflation hedge, I believe some people might relate that with, for example, fixed deposit, which for some people like point of view, I can just put that in FD and then that will be able to hedge inflation. But the matter of fact is that at times like this, does your FD really hedge the inflation?
FD basically bring you a flat earning. If you invest in FD, they mentioned to you the yield is 2%, you get 2% from the day you put in your money until the day you withdraw. So inflation, during those time, inflation could move up or down. Basically, the idea of inflation, when we feel about inflation, is the time when we go to petrol station to fill up our car tank, and we go, or we want to buy new property, buy house, or we go to kedai mamak to buy nasi kandar. See, why I paying more now? That's all because of inflation. That's why you see our inflation hedge portfolio invest in this asset that affect this price of the thing that you want to buy. That's why we invest in commodities. To continue with our presentation, if you look at this, if you invest with us, in our growth portfolio we have 11 ETF. Our income portfolio we have 10 ETF, and inflation hedge portfolio we have 10 ETF. In total, you have 31 ETF. And all you need is a minimum amount of RM 100 ringgit only to actually invest in all 31 ETF. Imagine you have 100 ringgit, go to supermarket, you cannot even buy 31 items, even 20 items. That's why how good is our investment platform is how affordable is our investment platform to all investors. The driving force behind our portfolio construction. Basically, we have four sets of algorithm. You can see here, four sets of algorithm. First algorithm is actually in the blue box here. They consist of four different, actually, the core algorithm is smart beta, and the rest actually a sub algorithm under the smart beta. And we have also another algorithm in orange box, green box, and that, and the fourth one is actually AI assist. One thing I want to highlight is each single algorithm actually designed for different type of portfolio. For example, growth portfolio, we only use the algorithm in the blue box. You mean a smart beta. I will discuss more detail on smart beta because I have subsequent presentation slide. Minimum volatility, basically, our algorithm tend to buy more ETF that actually volatility actually lower. Similarly, you buy more ETF that have cheaper valuation and buy ETF that has a good momentum. Mean good momentum, you mean you always buy a winners because only the winners that have long-term benefit to your portfolio, just like the football lah. If you bet on Manchester City, Manchester United, and Liverpool, you cannot go wrong because they always have momentum. And for income portfolio, we have what we call high yield relative to risk because our income portfolio only invest in bond. So when you invest in bond, like you invest in fixed deposit, your focus is always to get the highest yield is possible. You want to get bond with 20% or 25% yield is doable, but there's a lot of risk associated with it. That's why when our algorithm decide which bond to put into our portfolio, he look the bond with high risk, high yield, but also relative to risk. The risk that we use is a statistical number we call as CBAR, conditional value at risk. For inflation hedge portfolio, as we mentioned earlier, is essentially easy to understand. It based on Malaysian inflation rate. We make sure that we put asset class that actually correlate with Malaysian inflation. But we have some issue with that. Typically, the asset class that actually correlate with inflation, such as real estate, commodities, and they tend to correlate with equities as well. For example, if stock market went up, you see that actually your house price also went up, crude oil price also went up. So our algorithm put another algorithm we call low correlation. It means it try to minimize correlation between inflation hedge and growth portfolio. We mean is equity market actually went down, our inflation hedge are more protected. So, and the idea behind low correlation actually started from a theory that actually well known and actually being used by all the fund managers. And this theory has won a Nobel Prize in 1990. The founder is actually Harry Markowitz. This theory is called modern portfolio theory. You can Google it. You can read all the finance book that will tell all the details about this theory. Okay, smart beta strategy. That I mentioned earlier. If you look at normal portfolio, what I highlight here is actually normal portfolio and normal index. Easier for me to talk about index. For example, if you look at KLCI index, the largest component of KLCI index today could be Maybank, CIMB, Petronas Chemical, or Hartaliga. The only reason the largest weighted stock inside that index because they are the largest. They're the largest in terms of size, in terms of market value. But smart beta actually different. Smart beta, we change that what we call the way we allocate each stock into a portfolio. For example, smart beta use factors. In this example here, actually my factors actually value. In this portfolio, the cheapest stock will have the highest weightage, followed by cheap stock, and the most expensive stock will have the lowest weightage. Similarly, the smart beta also can be applied to other factors such as I mentioned earlier, minimum volatility, ESG, growth factors, or dividend factors, or many more factors that actually can be created. Okay, the last one is AI assist. You know that I mentioned earlier, we actually have four set of algorithm. Actually, three algorithm be taken up by each of functional portfolios. But the fourth algorithm actually monitor all portfolio in one go. Basically, it monitor all. Today we have 31 ETF. It monitor all 31 ETF inside our portfolio. Basically, what AI assist do? AI assist actually algorithm developed by our Japan party money design partner, and it use machine learning to actually identify ETF that have higher risk of large fall in near future. Within a month, it could fall by 10%. That's what AI assist do. So basically, what AI says do actually, we actually subscribe to a data from Refinitiv. Actually, Refinitiv, a very reputable company, Refinitiv Market Size Index. This Refinitiv will actually monitor all the news and market buzz around the globe through social media, Facebook, YouTube, Pinterest, LinkedIn, or blog. This platform will cover around 15,000 companies, 187 countries, 45 countries, and 36 communities, as well as 150 crypto countries. So it monitor all news and actually detect what is the sentiment of the market today. This data will be fed into our AI assist actually algorithm that we develop. Then when our AI assist analyze this data, he find out, oh, this data have negative impact to some ETF inside our portfolio. In my example, I put here actually ETF A. Then our system will automatically remove ETF A from the portfolio. As easy as that. It's actually a very complicated process, and this process only to detect what ETF they actually have high risk of falling, and you will remove the ETF before it actually start falling. Then let me share some of about MyTheo functional performance. We talk a lot more about algorithm. We see why is actually the positive effect of algorithm.
Most audience, like this is the part that they care about the most.
Okay.
This is the part where their
Okay.
eyes are wide open.
As I mentioned, we have three portfolio, actually, growth, income, inflation hedge portfolio. For each individual investor, they have different weightage to all portfolio. In my example, we call it balanced portfolio. Our balanced portfolio is 40, 40, 20, because naturally, our inflation hedge portfolio has the lowest weightage across the board. Across all 231 portfolio, inflation hedge portfolio tend to have the lowest weightage. You look at this, I highlighted 1 year to 5 years in the rate because the numbers actually in annualized basis. For example, if 5 years, the return is 11.93%, you mean your return, yearly return for 5 years on average is 11.93% compounded. So you can see here, this year usually we have a good year, especially for the growth portfolio. Even last month, in month of March, we actually have return of 2%. Month of April, I don't put it here. The unofficial number I get is actually another 2%, 2%, 2.8% roughly. So you can think that this year we will almost have 10% return year to date. So income portfolio, actually the return this year actually you can see quite a number of negative return over 6 months and 3 months. This because in US actually going up. Bond relationships only simple. When yield went up, bond price will go down. So I think all temporary. If you look long-term bigger picture, actually income portfolio give return of 4.55%. You compare that our fixed deposit today, roughly only around 1.6 to 1.8%, we still get 3% return more per year by just investing in our lowest risk portfolio, income portfolio. Inflation hedge portfolio, it just wanted to track the inflation hedge in Malaysia, but the return for this year actually quite good, basically driven by a strong rally in crude oil price and real estate sector in the US. So if you look at balanced portfolio, basically it's a combination of all these three portfolio. Basically, if you want to be invested, you try to invest at least 3 to 5 years. You can see more normalized result. 1 over 2 years, you can see some year you might have negative return or performance below par. But 3 to 5 years actually reflect the long-term return of our portfolio. In terms of growth portfolio, we expect around 10 to 12%. Income portfolio usually more than 5 to 6%. Similarly, inflation hedge roughly around 6% over long term. Market outlook. As you all know that actually over the past 1 year, actually market outlook very uncertain, but actually your investment, actually most of your investment doing well. But you can see that even MyTheo also doing well. Why? Even though nation economic is very uncertain, but MyTheo portfolio actually globally diversified. We actually invested, as Matt mentioned earlier, in 86 countries, and across all three functional portfolio, we have so many asset classes, and these asset classes, we try to make it not correlated to each other. The effect of this, the long-term return become more smoother, and you can expect more sustainable. And risk, one of question that people ask the most is about currency. You always invest in US listed ETF, we mean price in US dollar. I think I want to make it clear here. Even though our ETF actually is mostly in, okay, 100% of our ETF we invested today actually listed in US exchanges. They actually quoted in US dollar. The US dollar is just a cover only. The underlying instrument of that ETF actually in another country. For example, Hong Kong ETF actually 100% of share actually listed in Hong Kong is actually quoted in Hong Kong dollar. Similarly, Japan ETF actually all stock actually listed in Tokyo Stock Exchange actually quoted in Japanese yen. Actually, when you invest in MyTheo, even though we invest in 100% in US listed ETF, but actually it make up of a basket of currency. So the risk of impact for each currency to depreciate or appreciate against actually smoothen out by buying a basket of currency. Okay, one of the biggest issue we have actually rising US Treasury yield environment. You go to our blog, actually we actually publish one actually long detailed article about US Treasury yield impact to our MyTheo portfolio in the last two cycle when the yield actually rising. Based on our finding, actually, the only asset class actually affected by rising yield actually US Treasury yield. In fact, other bond asset class such as high yield bond actually benefit from rising high yield because they are more driven by credit risk, not interest rate risk. Lastly is the risk of inflation. Our inflation hedge portfolio actually specifically designed, created to protect investor from inflation. So you think inflation is a risk, you can put more money into inflation hedge portfolio. Okay, before I end my presentation, I have some advice to you, to all investors. First, when you want to invest, this actually normal advice given by all financial planners. You must practice dollar cost averaging. Don't never try to time the market. If you try to time the market, you will be a person like the chart below. Most people actually, when they try to time the market, they actually tend to follow what other people is doing. The herd mentality, we call it. A lot of people joining the stock market, then they start joining the stock market as well. They start to buy the same stock. Like today, everybody start to buy data prep. So when you start buying overcrowded stock, hot stock, basically most of you actually buy near the peak because of your greed. Then suddenly the share price actually fell. Then you become panic. Then suddenly you sell right at the bottom. Not just you actually going late into investment, but you also timing wrongly, and that cost you double. You buy at the peak, you sell at low. So that's why you always try to invest regularly. You can actually make use of our regular investment program. Actually, you can do it for any bank. Just doing standing instruction, automatically you'll be invested whether every weekly, every monthly, or every 3 months, up to you. Second, we must practice diversification. If you think there's a hot stock in the market, don't put all your money into that stock. What happens if the stock actually fell? You have no bullet anymore to restart your investing. So always try to diversify as many market as possible, as many stock as possible, or as many asset class as possible. And one thing that is more important is always stick to your investment plan. If you want to buy stock, you want to invest, you want to focus on what are risk level that are comfortable to you. Make sure you always stick to your risk level. You cannot simply change your risk level because stock market already went up. You fear that you are missing out. So you add more into stock that going up. That actually added more risk into your portfolio and actually cause a more risk for you to lose your money. Try to always investing long term. I know so many people actually try to punt into the market. When you punt to the market, you buy stock that actually very volatile. You tend to look the movement of stock every 5 minutes. You lose over your sleep for nothing. My final last word actually, this actually the quote actually I picked from one of the website. So many people that I asked actually, why don't you invest? He said, oh, I scared lah. I lost money already, ma. Many people They're scared to invest because they're risk of losing money. But they forgot there's another risk that you have to consider. The risk that you are retiring without any money also is a real risk. Before I end presentation, there is something special that I want to announce here. Okay, for newcomers promotion, if you actually start investing today until 14 May of 2021, you use this promo code, we will give you a 3 calendar month of management fee free of charge. And you can refer your friend to invest with us. We give you duit raya money, RM5 each. You got 1,000 friends, we give you 5,000 ringgit of duit raya money. And go, and this promo period will end until 31st July. Go and try to find more duit raya, please. That's all. I wrap up my presentation for today. Thank you very much.
Thank you so much, Mr. Amir. We also have viewer feedback that's saying that I've been using MyTheo for more than a year. My personal opinion is that it's the best in performance and user experience among others.
Okay, thank you for your comment. Because our portfolio makeup was so many asset class, we got the benefit of diversification. You can see that over the past 1 or 2 years, there's so many negative events. Because of this asset class, of this benefit of diversification, you have performance that actually not just positive, it's very, very smooth. You mean you don't see much volatility in your return.
Thank you for that. And so I guess with that, the slide earlier that you have already shared the top 5 advice or tips for advisors to invest in MyTheo, right? Mr. Matt, do you have anything to add in? For any tips for investors to invest in MyTheo basically to get the most out of MyTheo?
I think Amir has covered most of them. The only one I would say is you should start investing now, right now. There's always reasons to be worried about, what's going to happen to the market. Is now a good time to invest? Is now a bad time to invest? The important thing is to be in the market for as long as you can. That maximizes the chance of you getting a good return. You can open an account at MyTheo literally within 15, 20 minutes. My single piece of advice to people would be to start investing as soon as possible.
Right. Thank you for that. And other than that, one last question is, what do you think lies ahead in the future of wealth management? Now that we see more and more upcoming emergence of newer digital investment manager or robo advisory, that what they call it. So what do you think is in the future of this sort of new investment stuff?
There's maybe 2 things I'd mention. One, we've seen in other markets as well. Right now in Malaysia, the robo advisory services are all standalone services. MyTheo is a standalone service. Other people have standalone services, and that's fine. That's a good way to start. But I think if you think about it from a user's point of view, it may be more useful if that service is sitting on a platform that links to other financial services. So a platform that links to perhaps securities accounts or bank accounts or other financial products. And so what I think we'll see gradually going forward is services such as MyTheo being offered in partnership with other platforms. That should the product itself may be the same, but if it's offered as part of a platform, it makes it much easier to link to other financial services, and so users can see more holistically how they find out their finances is doing, rather than having to look at individual standalone services. So my expectation is gradually these kind of partnerships, platforms, will grow in popularity in Malaysia. We've certainly seen that happen in the US and in Europe as well.
Based on the number published by Bank Negara, total number of deposit in Malaysia today is 522 billion US dollar. 552 billion US dollar, earning something like 1.6% to 1.8%. So there's a lot of market for us to convince people to start investing to a platform that can provide higher return. In fact, the unit trust industry itself is only 650 billion in terms of size in Malaysia market. So robo-advisor industry is still less than 1 billion. So there's much room for us to grow and much room for us to convince a lot more people to put more money. I think you also have billion also in your bank account still in deposit. So that's why when you see is this trend, you can see that total number deposit in Malaysian market is so a lot, and there's a lot of opportunity for us and other robo advisor as well, or even for the conventional investment platform.
All right. So we are almost coming to the end of the session. So to wrap this up, what is that one big audacious habit or goal that you want audience to take action right now?
What investor, why you not investing today? They still want to wait. They still want to time the market. I said the best time to invest is not today. Actually, 30 years ago. That's why you must start investing immediately. It's no point putting money into your fixed deposit. Now paying as I mentioned so many times earlier, 1.6% to 1.8% earlier. It didn't cover your cost of nasi lemak 5 years from today. Okay. Second, actually stop. A lot of investors today, they when they invest, they tend to invest into one product. For example, if they're interested in crypto, they just put money into cryptocurrency platform and put all the money and invest there. It's not actually nothing wrong try to invest into crypto or any other investment product, but make sure you have to diversify. Actually, diversified, for example, only be done by professional investor. But you look at retail investor, they still tend to buy stock and put lumpy of their money into a single stock, and that stock tend to be smaller cap stock, high risk. One last point actually I want to highlight actually, every time I do presentation, people always ask one thing only, return, return, and return. Nobody care to ask about risk, risk, and risk. You need to educate yourself, not just focusing only on return, but also on risk.
Thank you for that, Mr. Amir.
Well, I like Amir's answers. Those are good. Yeah, I don't have that much to add to that. Other than the point I said before, it's like and Amir's point is exactly right. The best time to start investing is 30 years ago. That's impossible. The next best time to start investing is right now. We can't guarantee the future returns, but the way to maximize your chance of making money is being in the market as long as possible. And that means starting investing as soon as possible.
Thank you for that advice. Thank you, Amir. Thank you, Mr. Matt. Thanks for coming to the show today. I'm sorry for the hiccup earlier, but I'm really grateful for all the sharing, all the insightful slides that are done up by the team. Appreciate that.
We are also very grateful for you, Steve, and MyPF to invite us to give a webinar on your platform.
Thank you very much.
Yep, that is exactly what we believe in. We believe in having like a session like this so that all our viewers and audience can learn from like guys like you. Thank you. Really enjoy learning from you guys. I hope like all our viewers and audience have learned a lot from you. And not to forget, we have our promo code as well, which we'll be sharing in the comments. And I hope to have you guys again in the next session soon.
That's great. Thank you very much.
Thank you.
All right. Thank you.